Quick question. If I asked you right now why you own every single investment in your portfolio, could you answer for all of them? Not most. All of them. For a lot of successful people, the honest answer is, for at least a few, someone I trust told me to. And look, that's not irrational. If a friend, a colleague, or your CA mentions a stock or a fund that's done well for them, it feels like free, reliable information. Better than a stranger's opinion, better than an ad. It feels like doing your homework by proxy. The problem isn't that this advice is always bad. The problem is what happens when you never go back and evaluate it on its own terms because it came wrapped in trust, not in a process. Let's break down exactly what this costs you, because it's not one cost, it's four, and they compound. Cost 1. You don't know why you bought it, so you can't know when to sell it. When an investment enters your portfolio through a process, clear criteria, a defined role it's meant to play, you also inherit an exit rule. If it stops meeting that criteria, you know to reconsider it. But when an investment enters through a relationship, there's no criteria to fall back on. So when it underperforms, you are stuck. Is it a temporary rough patch or a genuine problem? You don't know, because you never defined what working meant for this investment in the first place. Cost 2. Your portfolio stops being a portfolio and becomes a collection. Each tip, taken individually, might seem reasonable at the time. But nobody is checking whether it overlaps with what you already own, whether it fits your actual asset allocation, or whether it's just another version of a bet you've already made 3 times over. Over years, this is how successful, busy professionals end up with a dozen scattered positions that look diversified on paper but are really just accumulated, not designed. Cost 3. The relationship makes the underperformer harder to exit, not easier. This is the part people don't say out loud. If a fund you picked through a rigorous process underperforms, exiting it is just a decision. If your cousin's business partner recommended it, exiting it can feel like a small social statement, like you're questioning their judgment, or worse, the relationship. So people hold on longer than the numbers justify, purely to avoid an awkward conversation that has nothing to do with markets. Cost 4. The opportunity cost, quietly compounding. This is the biggest one and the easiest to miss, because it never shows up as a loss on a statement. It shows up as a gap between what you have and what you could have had. Every rupee sitting in an investment that was never actually evaluated against alternatives is a rupee that isn't necessarily working as hard as it could be. Over 1 year, that gap might be invisible. Over 15 or 20 years, it's often the single largest, least discussed cost in a portfolio. Picture 2 investors, both starting with the same 50 lakh rupees 20 years ago. One builds a portfolio through a defined process, clear allocation logic, criteria for what stays and what goes. The other builds it the way most people actually do, a base position, plus tips and recommendations added over the years from people they trust. If the first portfolio compounds at a modest, steady rate versus the second at just 1 or 2 percentage points less per year, purely from overlap, undefined exits, and hesitation to correct course, the gap in outcome after 2 decades isn't small. It's often the difference between a comfortable retirement number and a stretched one. These figures are illustrative only, not a projection or promise. Actual outcomes depend on the specific investments, time period, and market conditions, and past performance is never a guarantee of future results. The tip itself usually isn't the problem. The absence of a process around it is. Go look at your own portfolio and ask, for each holding, do I know why this is here? And would I still buy it today if it walked in as a stranger? That's it for this one. Thanks for watching. Check out the video description. We've packed it with resources just for you. If you found this video helpful, please give it a thumbs up and share it with someone who needs it.